Welcome back. It's time now to take a look at the top business stories. Dubai Exports holds exporter support network to encourage local companies. Waha Capital to issue 500 million dirham convertible notes by June. And gold climbs to yet another record high. Let's look at the equity markets first. The DFM General Index dropped 1.6% to close the session at 1,638 points. Emaar Properties fell 2.9%. Drake & Skull was down 1.9% and Union Properties fell 4.9%. Telecom operator DO, despite more than doubling its net profit in the first quarter and beating expectations, was unchanged. Shura Capital, on the other hand, fell 4.2% after the UAE's biggest investment bank said its head of research resigned last week. 187 million shares were traded, valued at 291 million dirhams. And over in the capital, the ADX index fell 0.8% to close at 2,690 points, with the real estate sector down the most. Alder Properties dropped 3%. Suru Real Estate fell 2.7%. Both energy shares were also down, with Dana Gas losing 1.4% and TAQA falling 0.6%. First Gulf Bank dropped 2.2% after the bank recorded a net profit of 875 million dirhams in the first quarter of 2011. Largest loser, though, was Ras Al Khaimah Cement Company. Its shares fell the most in a week, over 8%, after the producer of building materials said its first quarter profit dropped 91%. 112 million shares were traded on the ADX, valued at 165 million dirhams. And now let's have a look at the GCC markets, which ended mixed today. Quite a week for the euro last week as the single currency hit a 16-month high against the US dollar. And this despite calls for the restructuring of Greek debt, slumping bond prices and the like. To talk about the euro and the dollar, we are now joined by Gaurav Kashyap, head of DGCX Trading at Alpari Middle East DMCC. Welcome, Gaurav.
Glad to be here, Linda.
So tell us, what is in for the euro this week?
Well, Linda, judging by the pricing action in the euro from last week's trading session, it seems that euro traders are completely disregarding any of these re-emerging EU sovereign debt issues that are slowly hitting the news headlines. And they are choosing to focus more on the interest rate differential side of the story and the prospects of the ECB hiking rates at a more aggressive pace than the Federal Reserve. And it seems like that trend might continue into trading this week, but what traders really need to ask themselves is how long will this trend of these upsides continue? As you'd mentioned, the Greek restructuring of the debt has hit headlines. We do have an EU and IMF-led group going to Greece on as early as May 5th, which also happens to coincide with the ECB's rate decision. And if we do need to see a situation where Greece has to restructure their debt, it's not a question of if it'll happen, but now when will it happen? It will definitely reverberate into the rest of the EU because not only will it affect the domestic citizens of the country, but it will also affect those countries holding Greek debt. So what we really need to watch out for is dollar performance this week. A lot of the dollar weakness last week helped the euro propel to its current levels. There will be a lot of pricing action and news which will be affecting the US dollar this week.
Talking about news concerning the US dollar, which ones are you looking at?
Linda, by far the most important piece of news is going to be the FOMC decision on Wednesday. Now, the difference in this FOMC meeting is that Ben Bernanke is going to be having his press conference, his usual press conference, followed by a round of Q&A. And because this is going to be the last Q&A session before the supposed confirmation of the end of the QE2, a lot of the traders are expecting a lot clearer perspective and picture of where rates are going to be and how they would be in the upcoming future. Now, we are expecting probably some kind of clarification on this issue. We're expecting confirmation of QE2 to end during this time. Anything other than that would render the dollar to be a lot weaker in trading this week. We're also looking at Thursday's US GDP reading, which is expected to show a slowdown to 1.9%. That's down below 3.1 from the following quarter. But as I said, the FOMC is going to be the driving factor behind US dollar pricing this week.
So Wednesday is the day.
Absolutely.
Thanks for coming in.
Thank you for having me.
See you next week. And now to our top stories. Dubai Exports, an agency of the Dubai Department of Economic Development, hosted the first of a series of meetings of the Exporter Support Network. The meeting was held to discuss ways to remove obstacles and overcome challenges local companies face when exporting goods to foreign markets, as well as find out solutions to support and develop the export sector in the UAE. One requirement being discussed included obtaining certificates of origin for manufactured goods in the UAE, as well as the impact of having bilateral trade agreements with the Arab market, which is one of the main target markets for Dubai exports. Abu Dhabi-based investment company Waha Capital, which is involved in real estate and leasing for the oil and aviation sectors, is set to issue 500 million dirhams worth of convertible notes by the end of June. In a statement issued to the Abu Dhabi Securities Exchange, the company said the bonds will be convertible 3 years after issue. The statement added that it will update the ADX and senior bodies surrounding key terms and conditions shortly, once approved by the board. Also, Waha posted first quarter results. Net profits fell 11% to 29.8 million dirhams as a restructuring of Waha Capital's leasing business cut into profit. Staying with Q1 results, UAE telecom operator Du more than doubled its net profit in the first quarter, plus beat analyst expectations. The telecom operator recorded a net profit of 206 million dirhams, a new record, up from 97 million the previous year, after royalties to the government of 50% of profits. CEO Osman Sultan expects revenue to grow 20% this year as the company forecasts a nationwide rollout of its services before the end of the year. He said the company is already in advanced testing of its services outside of its traditional geographical footprint. In the UAE, Du has an estimated 41% of the market share. Meanwhile, Emaar Properties recorded a net profit of 421 million in the first quarter of this year and revenues of 1.9 billion. According to Emirates news agency WAM, the company in a statement said that Q1 results were supported by the continued delivery of residential units in Burj Khalifa in Dubai, as well as the handover of commercial offices in the 8th Gate, Syria, an integrated project built to become the financial nerve center of the country. The company also commenced the delivery of one of its premium commercial projects, Boulevard Plaza, within downtown Dubai during this quarter. Emaar Hospitality Group, the hospitality and leisure subsidiary, also recorded positive growth with its flagship address hotels and resorts, recording an average occupancy of 87% in the first quarter. And in our fast financial news, the UAE Central Bank said lenders have been receptive to new retail rules designed to curb high service fees and excessive lending. Banks will have to start complying with the changed retail lending system on May 1st, the day when it becomes law. Banks have been broadly supportive, a central bank spokesman said. However, the regulator will consider making changes to the rules even after May 1st if enough lenders raise concerns about the new regime, said the spokesman. Qatar Gas has signed a 3-year deal with British energy company Centrica to supply 2.4 million tonnes of gas per year to the UK. The agreement is worth over 12 billion dirhams and will account for around 10% of British gas demand. And after the break, we will run you through what's making the headlines in international business today.